DJ, regarding JPM for May 2nd, I was analyzing this to understand expected move is 14 bucks, which would be 215. Yeah, there are other options, 220, 215 for 983X. Yeah, DJ, I just took that trade because it's a big boy trade, number one. But when I look at the daily chart, here, let's open it up a little bit. Here's the mean, right? When it breaks the mean, DJ, where does it go? Where does it fall to? Typically, lower Bollinger. Yeah, boom. When it breaks the mean to the upside, where does it go? Well, when you're narrow like this, almost a squeeze, it heads to the upper Bollinger, and if the upper Bollinger Band opens up, it can climb. And this was certainly an environment that it could climb in January. And you're at the upper Bollinger, and then you have reversion to the mean. If you break the mean here, where does it go? Lower Bollinger. You get a bounce. Where does it go? To the mean, almost. If it breaks, it does. If it does not break through, where does it go down to? Lower Bollinger. Then it rode that one as this Bollinger opened up. Hit the 200. Where does it go? To the mean. Dead stop. If it breaks the mean, where is it going to go? Well, it's going to try to get up to that Bollinger, but look what it met on the way. Oops. The 50 period simple. Uh-oh. Down it goes to the mean. Did it break the mean? No, it bounced off the mean. So it kind of hung out here, and then obviously we got, bad news and whatever happened, right? And you have this, drop. Where does it drop to? Lower Bollinger. Where does it go next? Up to the mean. Where is it now? At the mean. Failure, right? So when I look at this, I go, okay, well, where is the lower Bollinger? 206. Where are we now? 230. If this thing really dropped, just give me 1 or 2 days where it really drops. What would give me the best, return? Give me a really good return quickly. So that's why I didn't really use the expected move as much. I got, 210 is kind of a target. If this thing drops to 210, your 10 wide option, you don't have to get to 200 to make money. Yeah, your lower Bollinger is not the same, probably because I use 2.5. I program my Bollingers at 2.5, usually. Yeah, 2.5. When the markets are really volatile, I change them to 205. And you can see why. Look how perfect this is. Look at this, right to it. See, if I had two, it wouldn't be this beautiful, would it? So when the markets are really volatile, I change them to 2.5. But does that make sense? If we get a drop, down to 205, trust me, the 210s will be just fine. The 210 200s will be fantastic. Now, you could, if you wanted to take a trade, you could do the 225, 220s, right? And then just go out to, May 2nd. You could do that. Or you could even do before then. You could even go next week. So you could do those smaller 5 wides, but I decided to go not next week, but the week after, and I'm looking for a drop. Is there any place to go to get the offsetting trade symbols to place the hedges? I don't know. Michael might know that, but I'm not sure. Does Trade Station charge reorganization fees like E-Trade? No, they do not. 3-day rule on the gap. Yep. Yes, Texas E. That's correct. Yeah, it's like go 230, 220. Problem with 230, 220, it's going to be a little expensive. Don't think you're going to like the price of that nearly as much. So let's price it out. And if you're looking at May 2nd, let's just say, you go 230. So I'm going to buy the 230 put and sell the 220. I mean, that's not bad. Definitely it's not bad. But I think if you didn't want to go as far as I went, that's better, isn't it? You could do 220, 220, 210 for a little over $1. That's great. Yeah. So what remember, if you've got, if you start with something that's that far out of the money and you get a real drop, that out of the money call will explode. The premium will be absolutely insane. Yeah, I mean, there's something to be said for being close to in the money, but there's also something to be said for if you're looking for an extreme move, you're better off going a little bit out of the money. Plus, you get just much better bang for your buck, much better risk reward. If it's a slow grind, then you're better off doing it in baby steps at $5 at a time. Just keep moving your strikes each week. But if you're looking for a pop over the next 2 weeks or a drop in the next 2 weeks, out of the money is probably a little better. That's great. Sky, thanks for that resource. That's good. Let's see what that looks like. Yeah, very good. Very cool. Any other questions before we get rolling? So remember, Saturday I'm doing special session, 10 o'clock. I'm going to dual broadcast it here and in the Convert the Vert live room. How to build a small account from just a few $100 using the CTV methodology, which is super cool, with some really simple rules. Simple entry exit rules. I'm not going to get super complicated. I'm not going to go over the entire CTV. I'm just going to show you how to read the shift, the times of day that it happens, how and what to buy, and the most important, when to sell. Keep track of it and just keep building your account. So that'll be cool. Doing that Saturday. I mean, you could certainly use the default Bollinger at 2.0. Like I said, I use 2.5 on my Bollingers when the markets are extremely volatile. It just seems like it works better. It's not like it's going to give you any more information or less information one way or the other. I just like the way they look. I mean, even on a short-term time frame, look how this comes to the 2.5. Like, look at this, dead on, dead on. I mean, it's really this right to it, like right there. It's just, I mean, you could certainly find other points in the chart where it would have gone to the twos, but I just like 2.5s. Yeah, the middle is the mean, and then I change it from a line to crosses, and I put the crosses in pink. That way I can really see the mid. And so the mid in the Bollinger Bands set is actually the 20 period simple moving average. That's what the mid is. I used to use the 21 EMA. It's still just as valid, but with the 2.5 Bollingers being so accurate, I prefer having the 20. Just seems to work great. Okay, I think I've covered what it is that I wanted to cover. Most importantly was the first 20 minutes of music and sort of an explanation of where we began with this crazy uncertainty market of inflation. We went from inflation to trying to cut inflation to a slowdown of the rate of inflation, and all we were just kept the markets just were pinning their hopes on every piece of economic data because that would telegraph what Powell was going to do in terms of raising the rates. And then when the slowdown or the slowdown of the rate of inflation happened, then the conversation shifted to when is he going to cut, what is he going to cut, how much, and for how long. And then once that narrative was kind of destroyed with he went way too far, looks like a fool, Trump wins the election, and now all this stuff is happening. There's a lot going on, and right, even today with all of the earnings reports that came out that were so mixed, some up, some down. No deal with China, but maybe with Japan. Attorney General of New York looks like she's going to get indicted or sued. Stuff on the border, stuff, school shootings, and oh my God, I mean, there's so much going on that I just felt it was appropriate to talk about how you really, as a trader, you just have to be a no emotion kind of thing and just look at the charts. And that's all we've done is we just looked at the charts, make sense of them, have a plan. We talked a little bit about hedging. We talked about some collar strategies. If you have stock, just stay calm. Don't knee-jerk react. Market drops, don't all of a sudden jump into puts. Just let it confirm. If it looks like it's going to confirm, you can ease out of your positions and start looking at the other way. Wait for confirmation.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.